Well, guys, we were looking for it over the last 10 days, and it's finally occurred. The rare Zweig breadth thrust has happened, but what does it mean for us as traders and investors moving forward? In today's video, we take a look at the data over the next months and even year to see how big an event this really is, and whether Wall Street was early to this once again. Could it be that we're actually in a massive turning point here where the bulls will be in control of the market once again like they were in 2024? Well, with massive earnings coming out from Google as we kind of suspected and a huge change in the bonds market, there is a lot to discuss. Let's go through it all right now together as we cover stocks, commodities, and cryptos with everything that you need to know right now. This one's not to be missed. Let's go through an absolute crazy stat. Well, welcome back everyone to The Daily Show. My name's Tom, and what an episode we have today. Semiconductors up and a breadth thrust that you just do not see very often. But what does it mean for us? Well, in today's video, let's get into it straight away. We'll start off with what is a Zweig breadth thrust, the data surrounding it, and of course then go through all of the normal stuff, including the options moves. But let's start off here with the big one, which is the Zweig breadth thrust and how it triggers. If you want to read this, you can check it out in the links in the description over on our X account. So basically, this was a breadth thrust developed by Marty Zweig, and it's a very rare signal that triggers when the percentage of New York Stock Exchange advancing stocks over the 10-day moving average jumps from less than 40 to over 61.5% in 10 trading days or less. And as a translation, this basically is a massive surge in buying across the market, not just in tech or mega caps or anything in particular. Now, this is a huge deal because it often starts significant bull runs. So let's actually take a look at the data here when we're talking about these Zweig breadth thrusts and what it tends to mean for the next coming months. Now, we already thought for quite a while we're in stabilization mode. But what we didn't really think was we were going to get one of these. We were looking for it, but we didn't know if we were going to get it, considering the news that's been surrounding. Well, anyway, we do now have one. And you can see here 1 week, 2 week, 3 week, 1 month later, the stats are phenomenal. And in fact, a lot of the time, these Zweig breadth thrusts, although they can come with kind of, bottoming factors, which we'll talk about in a moment, they generally lead into extremely good 12-month periods. Now, what does the market know that we don't? Could it be that Wall Street, with those massive dark pools that we saw earlier this week, are privy or maybe even have information that they believe is going to turn these markets? Could it be that Trump going back a little bit on China tariffs is the wall of worry starting to come off and people, of course, speculating on it? Generally, markets love to speculate on that stuff, so of course, it seems kind of more likely. Now, according to Jason Gottfried, we actually have what he calls a super Zweig. Yes, we've gone past the level of just Zweig, and we're actually going now to the next one, which is basically where we hit an extreme on both sides, and that's an extreme sell and then extreme buy. And whenever we've had these ones, we've always gone in, and that is 100% of the time, at least in recorded history, into a massive next 12-month gain. So that is a plus 20% overall. Now, I've got to be real here, guys. This is one of the most bullish reads that you can get in markets. We've used this several times on the channel since we've started. And of course, we've always looked at this as being a huge turning point. And could it be once again? Well, of course, the statistics would be on your side. And that would also come along with what we've already been talking about, which is that we had that really good breadth the other day, that 96% plus breadth that, of course, looked really, really, really good and had those fantastic stats with it. So is everything fantastic? Well, we've been talking a little bit about the 1990s, and we've kind of speculated that maybe we're in this period of time here, which is effectively where we are right now, is around this point here with the Zweig breadth thrust. So could we be looking still at a market that will come down, have one last sell, and then rally back up? Well, if that does happen and the markets do come back down, now that we've had a Zweig breadth thrust, it certainly brings into focus the statistics more towards the bullish side. But I think it also needs to be noted that whenever you get these massive thrusts, we tend not to make new lows, okay? So that's really important. In fact, I think only over the last maybe 10 reads or something, we only made one new low, and that might have been back in 2015 read, that kind of period time there. So this is a very bullish signal. And of course, the markets are certainly feeling it. But even though this is the most overlaid right now, could it actually have just stopped this entire sell-off? Hey, that's possible, but we've got to keep everything in line. And as you'll see later on today's video, we'll still be talking about specifically some of the levels that we thought we'd hit. And one of those, of course, that 5,600 zone. We're getting closer to that now thanks to this breadth thrust. And that means that we're getting closer to where we think the real bears may sit if they wish to sell it off. So why did all of this happen? Well, of course, earlier this week, we saw Trump potentially rolling back on the idea of keeping these tariffs so high. We saw Besant, of course, talking about, them being unsustainable. And on top of all of this, we saw dark pool trades. Now, a few people asked me in the comments, what is a dark pool trade, man? You always talk about it. What the hell are you talking about? So basically, a dark pool trade is a transaction that goes on between two parties. So you've got to think about it as usually we will buy and sell on the market. Well, this is where maybe a company might, like a big hedge fund manager, might call up another hedge fund manager and say, I want to buy a certain amount of stock. And the other one will say, okay, I'll sell it to you. And they do it basically off the normal grid. So they don't do it in the normal transactions that you see. And then they report it usually at the end of the day or sometime during it. Now, why this is important to note is it's two large transactions, or it's one large transaction between two parties that you don't usually see in the markets. So, of course, that means that somebody potentially more sophisticated than us is making this transaction happen. On top of that, then sometimes you get sweeps, which are these diamonds. What is a sweep? Basically a really fast transaction done very quickly. And when you see these sweeps, then you've got to think about it as someone was in a hurry to get it done. So someone was not only in a hurry to make a big transaction this week down near the lows, but then we also had somebody stacking on top of that a huge trade right afterward. And this was, of course, in SCHG, which is a large growth ETF, but we saw it in so many. We saw it in the 1,000 growth here. We saw it in the S&P as well. And we saw it in, of course, IVV, which is the S&P ETF fund. So it seemed like pretty much some people in Wall Street, they knew that they want to buy this dip and they've been purchasing it up. Now the question will be what happens up here, because as you can see, there were a lot of transactions here that ended up being a short. We saw some monstrous buys here, obviously huge trades here as well. So many big trades going on recently. By the way, if you're new here, make sure to subscribe and smash that alert button. We do share these on the daily, these types of bits of information. Very helpful for us traders and investors. And you can see here the 5,600, 5,660 zone. That's going to be the key area that we'll be looking at. Now let's have a look at a couple of other analogs here when it comes to past history. Of course, now we have this super uber bullish kind of read that is traditionally exceptionally good. But on top of that, we have to look at some of the other times in history. You've got the 50s period here. You've got the 40s period here, thanks to Nautilus. And of course, you can see here the classic, which is, of course, the 1930s period, which is a dead cat bounce, which we still have to watch out for. And then, of course, complete calamity. Now, I guess the thing is with this one is it's a weird crash. Yeah, it's one that's caused by tariffs, caused by geopolitical risks, caused by all these other concerns. So it technically can be taken away. And then we could go down the line of deregulation and the line of course, tax cuts. Could it be that the market is thinking that right now and they're saying, you know what, I think these things are coming? Well, that certainly could be on the horizon. And as we kind of already thought here, as you can see from FinChat, that we had a very good earnings coming out of one of the big mag stocks. Okay, Tesla, yeah, we expected that to be what it was going to be. But Alphabet, Google, I had a suspicion there was going to be some good search ads. And there was some good search ads. Search was up 10, YouTube ads was up 10, Google Cloud was up plus 28, subscription was up plus 19. It was a exceptionally good earnings result. And basically the market, of course, rewarded it by moving it forward like 5, 6, 7% after hours. Now, we've also seen smart money starting to purchase recently, in which we've had in the charts. So, of course, here you can see that we've already...
Tired of hearing about tariffs? Let's talk about how Walmart is turning challenges into triumphs. In just 6 months, Walmart's stock has surged over 15%. How did they do it? It's all about smart strategies and solid fundamentals. First, they've got a rock-solid grocery business that keeps customers coming back. Plus, Walmart's strategic cost management and tech investments mean their supply chain is ready for anything. While other retailers struggle with supply chain disruptions, Walmart leverages its scale to strike favorable deals with suppliers. That means more savings for you and a stronger bottom line for them. Despite the tariff challenges, Walmart stays committed to delivering everyday low prices. Investors are loving it, and the market shows confidence in Walmart's ability to weather any storm. So next time you think tariffs are a retail death sentence, remember, Walmart's got this. Walmart navigating challenges, delivering value. Despite recent challenges from chip export restrictions to China, Bank of America analyst Vivek Arya maintains a buy rating on NVIDIA, lowering the price target to $150. The analyst believes NVIDIA's strong position in AI chip production and anticipated revenue growth from its Blackwell platform outweigh short-term risks. With expected revenue and earnings growth exceeding 50% this year, NVIDIA remains an attractive investment opportunity. Alphabet Inc. announced impressive first quarter 2025 results, with a 12% revenue increase to $90.2 billion and a 46% rise in net income to $34.5 billion. The company also raised its dividend by 5% and initiated a $70 billion stock repurchase program, reflecting confidence in future growth driven by AI and cloud services.